Hi, Doug Andrew here. Well, it's Thursday, November 7th, about 3 o'clock p.m. Mountain Time. So, thus far after the election, as of the recording of this video, Trump now has secured 295 electoral votes to Kamala Harris 226. It's obvious that he won the election. We are still waiting for Nevada and Arizona voting results to come in, but it looks like those will also go to Trump. So what should you be doing? Now, many people feel confused, whoever you were hoping would win the election. But what we have to do is think about, what does this mean? And so if you're feeling a little bit confused or maybe powerless, let me give you some guidance and direction so that you can get clarity. And so that's why my son and I will be teaching a Retire by Design special webinar next Tuesday, November 12th, for 90 minutes to talk specifically about what you ought to be doing to seize opportunities that have been opened up maybe for 4 years, or maybe just this tax year, 2024, and next year, 2025. So let me explain. Inasmuch as Trump has won, we do know now that the tax increases that Kamala was proposing will likely not come to fruition. Most of the time, and this is not a political video, this is just fact, the Democrat philosophy is that in order to raise tax revenue, let's raise taxes, whereas the Republican philosophy has always been, well, let's raise the revenue that's being taxed. So Trump is going to do everything he can to stimulate the economy, and he will keep taxes the same or lower them. Whereas Kamala was going to raise taxes, even maybe tax unrealized capital gains, which I don't know how she was going to pull that off. But we can breathe a little bit easy for at least right now. And she was going to raise corporate tax rates from 21% up to 28%, which is actually 33% more money, because if a corporation on $1,000 of profit was paying a tax at 21%, $210, and now they're paying $70 more. $70 is 33% more, not just 7% more. And a lot of people say, well, corporations can afford that. Actually, they can't, because most corporations only operate on a 2 or 3% profit margin. And that's why corporations hesitate to expand. They don't hire people. In fact, they lay off people in anticipation of another recession. And there's already major corporations right now in the news that are laying off a lot of people. Now, Trump is going to do everything he can to turn that around, and corporations know that he's going to keep the taxes, the corporate rates, at least 21% instead of raising them, and maybe even lower them some more. This was true. Businesses from even the United States went to Toronto, Canada, back when they lowered and actually eliminated corporate taxes. So that creates a lot of activity. People hire corporations and they expand, whereas they were getting ready to contract and lay off people and not expand. So what does that mean? We hopefully will have a vibrant economy here for the next 4 years. There's a lot of external forces we have no control over, however. Inflation has been out of control, and so Trump's going to do everything he can in order to lower inflation. But as far as taxes are concerned, in the 2017 act that Trump passed, it's set to sunset or expire at the end of 2025. Now, since he is president, and we may have not only a Senate that's now controlled by Republicans, but perhaps the House, it's looking like, this will be an opportunity to maybe extend those 2017 tax cuts, but don't count on it yet. And that's why I've been telling people, especially those over age 59 and a half, this is a window of opportunity where your current tax bracket is likely the lowest bracket you will ever be in. So what does that mean? And money will never be worth more than it is today because of inflation, no matter what the rate of inflation is. And so whether you need the money out of your IRA or 401k yet or not, especially if you're over age 59 and a half, and maybe if you're under that age, you might consider a 72T distribution. But This is an opportunity to get the money out of those IRAs or 401ks and get the taxes over and done with sooner than later at today's lower rates. So, for example, a married couple filing a joint tax return in 2024 can have up to about $201,000 of taxable income in a 22% federal tax rate. Now, there's a lot of married couples that maybe only have $150,000 of taxable income, so there's an extra $50,000 of room that you could get away with paying only 22% tax on an IRA or 401k instead of what it's going to jump to when those tax cuts expire at the end of 2025 or at the end of Trump's term if he's able to extend it, okay? If you don't use the room, you'll lose it, okay? Now, I'm not saying pull it out and spend it if you don't need the money. I'm saying get it out of there and get the taxes over and done with at 22% instead of waiting because that's going to jump. Now, a married couple filing a joint tax return that has an income in 2024, taxable income, okay, under $383,000, you have clear up till $383,000. You only pay 2% more than 24%. Now, they have not been that low, and if they expire, it'll be one of the biggest tax increases we've ever seen. Well, the 24% is going to jump to 28%, and people say, well, that's only 4% more. No, again, if you're paying at 24%, $240 out of every $1,000 of income, and you have to now pay another $40, 40 into 240, okay, that's a 16.66% actual increase in money you have to shell out in tax. Does that make sense? Quit looking at what percent the tax goes up. Look at the percentage increase in the amount of money you have to shell out, okay? And so that's why years ago I developed what is called a strategic rollout. This is not a rollover. A rollover is going from the frying pan into the fire. This is taking money in IRAs or 401ks and rolling them over to actually into IRAs and then deferring, procrastinating until age 72 or 73, and then taking RMDs, required minimum distributions. That doesn't save tax. In fact, it compounds the tax by stringing it out, especially to your life expectancy and your spouses and on down to your children. I can prove that to you mathematically. And so a strategic rollout means you're rolling the money out strategically. So if you're a married couple filing a joint tax return and your taxable income was, $200,000 or $250,000, you have between that number clear up to $383,900 for 2024 that you could pull out money and pay probably the lowest tax rate you'll ever pay the rest of your life, 24%. And if you don't do it, you're probably going to kick yourself. And then you take the net after tax and put it over into something that's going to be tax-free from now on. That is the critical strategy. What's tax-free? Well, it's a maximum funded tax-advantaged laser fund, okay? It's an IUL laser fund, structured correctly and funded properly, and I've earned average returns of 11 to 14% by diversifying and rebalancing. And if you want to know what all this means, that's why we teach these educational sessions, especially as a retirement planning specialist, and I would love to minimize the tax that you pay. So it doesn't matter if I'm talking to Republicans or Democrats. If they have the opportunity to save unnecessary tax, I've never not seen them do that, okay, to causes that they support rather than just rolling over and paying a whole bunch of unnecessary tax and letting the government decide what to do with that money. And I've helped many couples save not only 10, 20, 30,000 of unnecessary tax, but $250,000, $750,000. Saved one couple $1.2 million of unnecessary tax. So if you would like to explore this, especially if you have saved in IRAs, 401ks, yet to be taxed, qualified accounts, $250,000 or more, you need to attend this free educational webinar. So let me show you how you can do that. It's called Retire by Design, and it's next Tuesday, November 12th. It's free, and it's 90 minutes, jam-packed with information. And I'm going to be teaching, as well as my son, who's one of the top tax strategists in America. And it starts at 11:30 a.m. Mountain Time. It'll go for 90 minutes, okay, until 1 p.m. Mountain Time. So if you want to register, it's free. You go to Retire by Design, okay, like all one word, no spaces, Retire by Design event. Retire by Design event. Or if you go to 3dimensionalwealth.com, this is the name of my YouTube channel, you click on events and you'll see also where you can register for this. But the quickest way to get there is just retirebydesignevent.com. And I would love to see you next Tuesday so I can give you insights into opportunities that you don't want to miss out now that we know what the next 2 years and maybe the next 4 years holds for us from a tax standpoint. It will probably be the lowest taxes you will ever pay the rest of your life. And this is what we now know because I was concerned because taxes were going to go up dramatically based upon the proposals of the Biden-Harris administration. So this is not about me. This is about you and your brighter future. Go register now.